Okay, in today's episode of the Investing City podcast, super excited to have Brian Dress on for the second time. So thanks for being here, Brian.
Ryan, it's great to be back and happy to be talking with your audience once again.
Awesome. So I can't remember the exact date I had you on the first time, but we talked about companies like Roku and Teladoc and Zoom, and those have obviously been really big winners. And so I'm excited to have you on for a second time. And just before recording, we were kind of talking about how this year has started. So it started out really hot, and then kind of mid-February, growth really cooled off, and now we're rebounding a little bit. But I'd like you to just kind of, I'd like to just kind of hear your thoughts about how this year has gone so far.
Yeah, absolutely. First of all, it's great to come back and talk to you after we made those calls. Makes us look pretty good, to be honest. Yeah, it's been an interesting year so far. You know, in 2020, of course, we all know what's gone on in 2020, but from a growth investing perspective, it was pretty much, bottom left of the chart to top right. So pretty easy as a growth investor to stay invested and feel good about what you were doing. In February this year, there was kind of a topping out of growth stocks and a rotation. And, I like to say a lot of the times, people are looking for a reason to sell. And that was kind of what happened early in the year this year, as we saw a big rotation from growth stocks to the quote unquote value stocks. And there's been a lot of, concern, consternation about interest rates and inflation. And, we obviously did our due diligence, and we, first of all, looked at our positions and decided, do we feel comfortable with them? And we said we did. We also had to look at some of these other sectors, oil, metals, mining, and that sort of thing. And, we have the securities evaluation application in-house, and it's called Jarvis. And all the first for the first half of the year, it really was signaling to us that there were a lot of these inflationary indicators that were popping off, whether it be oil or metals, agriculture, and what have you. But the question for us was, are these secular trends, or is it sort of the flavor of the month? And for us, the flavor of the month is just that. And, what we really want to do is stick to our principles and stick with companies that have secular trends as a tailwind. And, as we sit here today in sort of late July of 2021, we feel pretty good about the fact that we stood on our principles and stayed with those growth stocks. Because as we speak today, now we're looking at interest rates, the 10-year Treasury starting to make new lows in yield again. So that inflationary narrative that was sort of overtaking everything for a few months now has sort of gone back to the wayside. And now people are back looking at growth stocks again, back in favor. So it's been interesting. It's been educational. Really, what we've learned is what we always knew, which is stick to your principles and stick with companies that have that fundamental underpinning.
Totally. I'm glad you mentioned that. It really has seemed like the market has become very binary. Like things just are lumped in, and you can kind of see that, like, growth, just fast growing companies will all sell off, even though the company dynamics are all very individual. So just kind of going off of that, if you were to give some advice to an investor who, is going through a big gut check, like what are some things that they can do to really get peace and conviction in their companies?
Well, the first thing I would say is experience helps. I can remember being new in the markets, and, companies that you really like, you end up selling because the stock goes down. And at the end of the day, it's just really a terrible way to do it. I think we all know buy low, sell high. It's a very simple concept, but, in practice, the emotions get involved and it's really difficult. So what I tell a lot of people is it's the same thing about getting invested in the first place. It's hard to do that first time, but when you go in and you invest, or you try to hold on to an investment that is good, when you get that feedback, 12 or 24 months later, and what you did worked out, then you start to realize, okay, well, my strategy makes sense. And it just gets that much easier over time. And, So experience really helps. Speaking with people that have had that experience really helps. Working with an advisor that can help you, through those tough times. That's what we do here is as advisors, is we help people hold on to the investments that we know are good, because we know emotions and current events come into play all the time. It's really hard to maintain that perspective when you have, financial media all over the place, narratives here and there. We understand it's difficult. So we try to help people stick to the convictions of, find the best businesses and just stay with them. Over time, you will find that's really the only way to invest.
Yeah, it's interesting when you see some of these companies that have really high valuations start to pull back like 20-30%. Then you see a lot of the bears come out and say, oh, it could drop another 70% based on different multiples. And how do you think about valuation when you see pullbacks? Like what is kind of left brain's process of kind of checking your companies, or is that something that you're not really worried about in the short term?
Yeah, in the short term, not really. I think, we always talk about, if you want to buy a Louis Vuitton bag, that rarely goes on sale. The best merchandise is rarely on sale, and you're going to have to pay a high price for it. It's really similar in stocks, especially growth stocks. And you can look back over the last 30 or 40 years, which is kind of like the technical revolution. It's really, you never find really high quality stocks at low valuations. And so, yeah, I understand it's hard to get in the first place, and that's one reason. Now, however, what's great about growth stocks is, and I can't tell you an exact time frame on this, but it seems like every year or two there's a sell-off in growth stocks. And so, if I'm a person that's not invested in growth stocks and I'm looking for a way in, it really seems like opportunities come around more often than you would expect. And so, what we try to tell people is, take advantage of those sell-offs. It feels bad if you're invested, but if you have money on the sideline, it's actually a great opportunity. So part of the thing that we do at our firm with advisory clients is trying to educate them. And the first time they work with us and they see a downturn in the market, they'll call up maybe panicked or feeling some kind of way about it. But the third and fourth downturn that they experience with us, they start to call us and say, is this another opportunity to put some more money to work? And that's what we try to do, to try to educate clients to understand that, especially with growth stocks, we're looking for opportunities for pullbacks to actually get involved. And I think sort of perversely is that those high valuations do help you, because that's why these sell-offs do happen to be so deep sometimes. If you had a company that was trading at a much lower valuation than some of these high flyers, you wouldn't have those kind of pullbacks. But if you're willing to stomach that, and you have that conviction that the business case hasn't changed at all, and in the case of a lot of companies we follow, nothing changed in the business in 2021. It's been a completely in steady state of growth or accelerating growth. Nothing's changed fundamentally. Just the price has changed. If you can tune out that noise, it's really an opportunity.
Yeah. So speaking of two really high quality companies, I know we want to talk about CrowdStrike and NVIDIA. So you want to break down CrowdStrike for us first?
Sure. So I guess the first thing I would do is, I don't know if we talked about this the last time I was on, but we have like a pretty simple process. We're looking for 4 or 5 criteria, pretty much in any company that we follow. The first is accelerating revenue growth. That's the number one. When you see sales growth continuing to go higher and higher, it tells you something's really happening at a business. Kind of along those same lines, expanding margins. We love to see expanding margins in a business, making more money, becoming more profitable over time. We're looking for companies that are led by founder CEOs, or really high quality management. And a lot of that is skin in the game. A lot of that is alignment of interest with the management. We're looking for companies that are category defining companies, or changing the game, displacing a legacy operator. And then finally, expanding total addressable market or benign competition. So those are the type of things that we look for. And CrowdStrike really checks all of those boxes. So we do CEO profiles in-house sometimes, and we really want to know on a deep dive what the management of a company is like. We did that for George Kurtz, CEO of CrowdStrike, and really impressive person. He was one of these kind of hacker young kids. So he was in the programming game when he was 8, 9, 10, 11 years old. He went off to be an accountancy student, and then found his way back to cybersecurity quite quickly when he got into the business world. So, he's got that deep foundation. So we talk about total addressable markets expanding. Cybersecurity is one of the most expanding total addressable markets you'll find anywhere in the markets. And the reason for that is cybersecurity is not a discretionary expense by any means. And if anybody who watches the news knows, with the SolarWinds breach and so many other of these ransomware attacks, cybersecurity is at the forefront of every CEO and every C-suite in corporate America thinking about how do we deal with this. And so that means spend, and that goes right to CrowdStrike's top and bottom line. This company is not still accelerating growth, but it would be hard to accelerate growth from where it's at, which is now at 70% revenue growth. The company's generating about $1 billion in revenue per year. So it's pretty amazing that it could grow at this level at that high basis. And the company is sort of showing a trajectory toward profitability, and especially on the free cash flow line. So that's really amazing. And then finally, a category defining product. That is in evidence here. A lot of the other cybersecurity products are built on top of an old on-premise architecture. CrowdStrike was founded in 2011, so they started in the cloud. And so they have a huge advantage over everyone else. And just as you look into how their product works with the way they use AI and machine learning, it's really best of breed. And so it's like all these boxes are a check for us with our process. CrowdStrike fulfills all those criteria.
Awesome. So have you looked at SentinelOne, the recent IPO yet?
I have not.
Yeah, I mean, it's interesting. The valuation, so that I would consider it like a number 2 compared to CrowdStrike. CrowdStrike is still like 8 times bigger in terms of revenue. SentinelOne is losing a ton of money. I think their operating margins are like worse than negative 100%. So they are definitely losing a lot of money to try to catch up with CrowdStrike. But yeah, it's something that been looking at recently because, full disclosure, I do own CrowdStrike and have for a while. So yeah, I would love to dig in a little more about the CEO profiles that you mentioned.
Sure.
Kind of what's your process for going through those? Just reading every interview you can. Just give us a few tips on how to do that.
Yeah, absolutely. So, of course, as we analyze any business, we kind of go through all the, the income statement, balance sheet, and all the sort of traditional metrics. But what we found is this, CEO profile process has really led us to some of the best companies. And I've written probably 25 of these. And I would say the 5 best or 5 highest scored CEOs correspond with some of the most amazing performance in any business in the markets. And it's not a coincidence. The best management that you can get is really going to make the best company you can find. And so you're right. So we look in, we read everything about the history of these people from childhood all the way through education and sort of early in their business careers, and every interview that you can. Listening to the people's voice and the tone of voice can really help. You understand that person, understand their vision. It's kind of similar to why we always advocate people to listen to the earnings calls of any business that they're invested in. Is just that you get that tone of voice of the management, and you start to gain more familiarity than you would just from reading the numbers. As I said, some of the best businesses we found we were led to those by first doing the CEO profile, being so impressed with the management, especially those who are founders. It's in their DNA, the company's DNA, their DNA, it's the same. So you can get a pretty good visibility into the viability of a business and what makes a business special just by learning, the background of that CEO.
Yeah, I love that. I think it's important too. You mentioned that familiarity, um, especially kind of going off what we talked about at the beginning. These big sell-offs sometimes when you can actually put like a voice and a person to the business, and if you get to know sort of the high-level employees and really know them, then it's like, okay, I know these people are still working and still moving this company forward, and it kind of gives you just a little bit more conviction. So you mentioned those top 5 CEOs. Are there any ones that you'd like to bring up? Because I'm really curious about that.
Well, we'll talk about one in the next company as well. But another one I can think of is Mark Benioff at Salesforce. That really stood out for us. The co-CEOs over at Atlassian, that's ticker Team. Those are a couple others that really stood out for us. Really, if you go through a lot of these really high-flying tech, Internet 2.0 type businesses, a lot of them have just some of the most impressive management teams that you could imagine. Cloudflare, there's another one, NET.
Mm-hmm. Yeah, Matt Prince.
Yeah.
So not to put you on the spot or anything, but I don't really know a lot of Mark Benioff's background. Is there anything like where did he even come from?
So he's another one of these hacker kids. This is amazing. He worked for Steve Jobs at Apple, I think in the early 80s, and then went to college, USC, did that whole thing, and then went to work for Oracle. So his 2 mentors are Steve Jobs and Larry Ellison at Oracle. So it's just like, it's amazing. You start to do the reading and it's like, wow, the background, it's incredible. And to have the access to those luminaries, in the formative years, I think is really what drove Benioff. And it was a special person no matter what, but it's just amazing to see, those type of connections come out as you do the research.
Yeah, I love finding something like that. That's super interesting. Like I remember looking into Eric Yuan from Zoom, and
Sure.
he
From
he
Cisco.
basically he left Cisco, thought the product couldn't wasn't as good as it should be, and then when he left, there was basically like an exodus from the engineering team at Cisco. I think like 40 people followed him, which is like, wow, just imagine 40 people completely changing their lives to follow this guy and start a company. Like there's something special there. So you mentioned NVIDIA and Jensen. I would love to talk about NVIDIA real quick.
Sure, of course. You want to talk about Jensen or do you want to talk about the company first?
You can feel free. Let's talk about the company and then you can go into
Okay.
him.
So I think this company was misunderstood for a long time, especially when crypto had the big explosion in 2017, 2018. NVIDIA, they started with gaming chips, gaming cards. The cryptocurrency miners started to use these cards because they were clearly top of the line. And what happened was crypto collapsed at that time, late 2018, I believe it was. Or maybe it was late 2017. In any case, the market thought, okay, there were all these cards that were sold for cryptocurrency mining. If crypto falls apart, then what does NVIDIA have, really as a business? And, they really misunderstood what was going on in NVIDIA because NVIDIA has so many different business lines. They're one of the leaders in AI and machine learning, powering that with their chips and cards. Again, some of the most top of the line, computer hardware that you can find. But not only that, but data center. Data center is really the driver of this business. The fastest growing, the real warhorse of this business is data center. You look around cloud, everybody talks cloud. We know about cloud. We're invested in a lot of companies that are involved with cloud. Well, what is AWS? Amazon, their cloud business. What does Google Cloud use? What does Microsoft Azure use? They all use, NVIDIA data center cards and NVIDIA data center servers. And so this company is right at the forefront of pretty much everything in the cloud business. And also, moving out into like autonomous driving. So they've got optionality as well into the future. So as a vision driven company by the CEO that we'll talk about in a minute here. But we also like a lot of the acquisitions they've made. The Mellanox acquisition we thought was a strong acquisition for them. We love this ARM deal that they made. A company that's involved in pretty much every cell phone in the world. And I know there's a lot of controversy about whether that deal will go through, but we really like the opportunity there if it does go through. NVIDIA wasn't really that involved with cell phones before the ARM deal. So we really like that, Jensen Huang, the CEO, is always pushing forward. And then this company is almost $500 billion company, growing revenue at 64% year over year last quarter. It's just hard to believe. It really is. So, and again, we'll get into this, but one of the best CEOs we've ever studied is Jensen Huang.
Yeah, it is pretty wild, just the scale. I think they're doing like over $25 billion in revenue, growing at 60% with, 30% free cash flow margins, like just unbelievable dominance. So I would love for you to talk about Jensen and kind of his background, and I would love to learn more about that.
Sure. So again, we try to watch almost every interview we can from people like this, like Jensen Huang. And I would encourage folks to go out and watch a talk he gave at his alma mater, Oregon State. And he was talking about the early days of NVIDIA. And I can't really do it justice here, but the long and short of it was he was talking about how the company was down to like 6 months worth of cash on hand. And they had about a 24-month lead time to create the product, their first product. And he found a way to make it work. He found a way to survive and make the company thrive from that point. And that really drew me in. I was like, wow, what a survivor. This guy's a problem solver, something that probably anybody else would have said, forget it, I'll just move on to the next opportunity. He didn't. And he stuck in it and made it work. And, if you go back through the history of NVIDIA, there have been 3, 4, 5 iterations of NVIDIA. And every time NVIDIA did something different, the market sold the stock off, didn't believe in the company. But every time Jensen proved them wrong. And, that's the type of characteristic you really want to see in a manager of a business that you're invested in, is one that's not going to give up. It's one that's going to do everything he can to solve the problems of the business. And then it's pretty easy to have confidence in the company as long as he's at the helm. And then the proof's in the pudding. I mean, yeah, 20 years before all this data center stuff, they did pretty well. But geez, the last 5 years been pretty amazing.
For sure. So you mentioned one of your criteria is an expanding TAM, and it seems like NVIDIA's TAM is like, it's really hard to even put a number on it. So how do you guys think about, do you actually size TAMs, or is it like with this much tailwind, it's sort of, oh, it doesn't really matter because things are going to grow so much? Like, how do you think about sizing markets?
Yeah, it's tough in a case of a company like NVIDIA because they've got all these different business lines. We do rely on the companies to sort of give us the answers sometimes. You look through the investor presentation, and some companies are better than others, but you really get an opportunity to understand how the company itself looks at the opportunity. And then, the way that we really do it and check it is look at competitors and, do they have a similar view of it? But yeah, for NVIDIA, it's clear the TAM's expanding. It's clear that they're going into new lines of business all the time. And so, yeah, it's not necessarily where we feel like we got to put an absolute figure on it. But we're looking more like at the trajectory. And so, it's clear there's a trajectory here. And then you can check it as well with the numbers in the revenue line. So if in Q1, I see a TAM of 500 billion, Q2, I think 550 or what have you. And then I check it against the revenue numbers as they come out over time. And you start to get a little bit more comfortable with how the company sees it on their own. So it's a guess and check at times. We do like to go from, especially with a company that we trust and the management that we trust. So the starting point is at the investor presentation and the 10K and all that. So yeah, it's not important to be completely precise on a lot of these things. I think growth investing is really driven by trajectories more than anything else.
Yeah, I think Imad kind of thinking about the optionality and the future of what this company could be is a really hard exercise, but I think it's super valuable of like, what's the end state that this company could be and how big could that actually be? Which I think is really hard to kind of think through all the possibilities.
Yeah, I agree. I think so in growth investing. So I came from a trading background. So a lot of times you were looking, maybe I took a position, then you sell it at a price, you support on the chart or whatever. But looking back on it, it's really a failure of imagination. A lot of times you buy a stock at 50 and try to take it to 100. But, a lot of these growth stocks, you buy it at 50 and it goes to 500. And a lot of it's because they're open-ended growth stocks. And put that growth together with compounding, it's pretty incredible what it can do sometimes. And so that's exactly why we don't want to put ceilings on things or upper bounds, or when you have a company like NVDA, okay, well they ran into okay, maybe this is the most they can do in data center, or the most they can do in gaming. Well, then the next step was, well, how do we grow into something else, AI or into cell phones? So you have to realize that, some of these great managers have an imagination and innovation spirit that can take it beyond what you might think, just sitting down and running the numbers.
Definitely. And I think sometimes it's kind of easy to forget, like these founders, just think about how long they've actually been thinking and dreaming about their business. I mean, Jensen, he's been running NVIDIA for, more than 20 years. And it's like how much he's been thinking about it, whether it's in the shower, it's probably just been all consuming him for 2 decades. And like we're investors looking at a business for the first time. There's going to be so much that we don't know, which is pretty humbling as well. So like looking at NVIDIA, when part of your process, you mentioned benign competition. So how do you think about something like AMD or another competitor? So
I think there are some good competitors. NVIDIA is kind of out there in front of all of them. We study AMD. AMD started at a pretty low point, 5 or 10 years ago. They were in the dumps. But they brought in someone really smart to run the company, and she's brought it around. And they don't necessarily directly compete in everything, but there is, some competition there. That's what we talk about, the expanding TAM as well. It gives us some leeway in that situation, right? So if a total addressable market's expanding, then that means there's room for more than one winner. So yeah, we got to keep an eye on the competition. It's fierce at times, but NVIDIA is so far out in front that I think it looks good, especially as you consider how much data center usage there is. We know it's going to keep growing. We know AI is a growing field. We know, autonomous driving could be, a massive winner for them. So yeah, that's kind of how we look at it. Some companies like CrowdStrike, they have so much a better product than pretty much anyone. So we feel pretty comfortable there. But again, that's an expanding TAM. So that's 2 ways to win. As we mentioned in chips, competition is becoming more fierce. But yeah, like look around. There's such a demand for chips, it can't be filled.
Yeah, for sure. Okay, so CrowdStrike and NVIDIA, any other details you want to bring up about those two?
No, just bringing it back to the concepts that we look for, so that expanding revenue, that trajectory to profitability, and expanding TAMs, and quality management, and that's just an easy formula for investors to follow to find really special companies.
For sure. So this criteria, was it sort of like iterated over time, or how did you guys kind of come to those five?
Oh, sure. Yeah. I mean, you learn more every time you make an investment, especially if you have an investment that goes negative, you learn more and more. But we just look at, the companies we've invested in that have done the best, and they really all seem to carry those same characteristics. And, I know we talk about tech all the time, but we're not only tech oriented. It just happens to be where most of the growth is today. But yeah, that might change in 10 years, and we might be looking at another sector. But no matter what sector you're looking in, those characteristics are always going to pop up in the best businesses. I think you go back in history, and look at some of the like a Xerox, or some of the biggest winners in the 60s or 80s or anything else. Those characteristics are all going to be there.
Mm. Yeah, no, that's true. So are there any other companies you wanted to mention? Any things you guys been looking at?
Oh, there's so many. Geez. Yeah, didn't really prepare anything else, but yeah, I mean, we still like Roku. A number of the businesses that we mentioned last year in TDoc, they all kind of fit into that same category. I think a lot of these businesses really did well because of the pandemic. They accelerated because of the pandemic. Zoom's another one. But we like these businesses before that. And I think we want to be clear that these weren't just pandemic plays. Yeah, they made more money because of the pandemic. But you know what? The fact that they did so gives them even more of an advantage to grow going forwards. Better balance sheets, better revenue versus expenses, better net income. And we just think they're going to continue to grow as they have in the past.
No, I'm glad you brought that up. It's a great viewpoint, and didn't mean to put you on the spot, but I knew
That's
you'd
okay.
handle it. Hey, well, thanks so much, Brian. I appreciate you coming on to talk about CrowdStrike and NVIDIA, and I'm sure listeners will take away a lot from this.
Sure.
Great.